Tariq, I know you have a view about this, which is you think that actually ESG has been well, I don't know at this point, because I know you've been very critical of ESG efforts, even though you were at BlackRock. But do you believe that this unto itself has created the problem?
I think it probably is having an effect on energy production, but probably not in the way that people think. So the traditional idea around ESG is that it's going to affect the financing costs of companies because investors are looking at it and they're trying to lean towards better ESG performers. And so in doing that, it affects the financing cost, it changes the behavior of companies. I'm not sure that that is really happening because for the most part, they're reshuffling, ESG products tend to reshuffle secondary sort of shares and other things that don't have an impact. I think on bank financing and maybe in Europe and certain geographies it does. Overall, on the whole, it seems like capital, continues to find the most, productive returns, right, because of legal obligations and incentives. But I do think that ESG probably has inserted a lot of uncertainty, where a CFO may not decide not to go ahead with a new project because they're worried about, their score and inclusion in the ESG fund. But just generally the idea that ESG is sort of the, everyone knows that, we need to do more to reach, climate goals. And if ESG is the answer, which is kind of all things, all people, it's a little bit nebulous. I think it's quite hard to greenlight a long-term project because you don't have the kind of orderly transition.
But Tariq, there's the thing so I've been following you, and I have to say that I'm going to say I've been following you. I've been trying to follow your story over the past year, and you've been very public about your views that you think that ESG, to some degree, is sort of a whitewash. But at the same time, it sounds to me like you're also saying that it's a whitewash and not doing enough. And so then the question is, if it actually did enough, would it create an even bigger problem today?
I guess the question is what you mean by enough, because ESG right now would be affecting supply, not again by affecting really the financing costs of the underlying producers, but probably by inserting uncertainty into what an orderly transition looks like. Because again, instead of, Xi Jinping says electric vehicles by 2035, Chinese automakers know what they're dealing with, right? They have goalposts. If ESG is going to guide, let's say, the auto industry, I'm not sure you can green, any industry, it's hard to greenlight long-term projects with that kind of uncertainty involved. And so I think it's done a little bit to supply by inserting uncertainty at a time that, incentives are short-term and managers.
Tariq, I got to go to Jonathan, but I can't figure out if you think that uncertainty is a good thing or a bad thing. Because for a long time, you've been complaining that ESG is not doing, as I said, is not doing enough. And so you'd think that uncertainty, I would think you'd think the uncertainty is a good thing since you're trying to move the needle on ESG, right?
I think it's a disaster. It's not a good thing. I don't think any CEO would tell you that they can make long-term investments with the kind of uncertainty associated with leaving ESG to achieve our climate goals. That has to come from policy and be systemic. So ESG right now, it affects one side of the equation, is doing a little bit, but it's not doing it in the way we need, right? I mean, it's not creating the sort of orderly transition that we're going to need to decarbonize.
Hey, Jonathan, what do you think?
Well, I think it's sometimes helpful in these discussions to talk about the data. The data shows that U.S. gas production is at record highs. Oil production's back to basically where it was pre-pandemic. The U.S. produces about 12 million barrels a day. Russia produces about 10, exports 6 million of that. So if we're going to have the debate about whether U.S. production's being constrained to such an extent that it's going to offset potential Russian exports, we've got to talk about 6 million barrels a day. And there just simply aren't enough projects out there in the U.S. fields that ESG investors have stopped happening that could have generated 6 million barrels a day. So I think that argument is sort of slightly silly, and those that make it need to look at the data.
I'm so glad you brought us data, because it makes the argument that the ESG piece of it may actually be bull in the end. But then if that's the case, if that is the case, is there a separate policy thing that you think is preventing more production?
So firstly, ESG does help in terms of improving the efficiency of that production, reducing flaring, improving water efficiency, helping with health and safety for workers. So there are things there that are still important. We've got to keep that in mind. But let's talk about what would have made a difference. And those are things like LNG exports, right? So being able to do the mega project investments to be able to get LNG exports to Europe. Right now, there's both a challenge in terms of the import capacity in Europe. Even if you maxed out the import capacity, capacity. You'd only be able to offset about 40% of European demand for gas, and you don't have the infrastructure to distribute that. So that's one. The other one is nuclear. I think it was clearly a disastrous decision by the German government and others to phase out nuclear ahead of schedule, and I think we're seeing the consequences of that. And perhaps some investors, would have been on the side of trying to divest from nuclear, and I think people need to rethink their positions on that.